guess, and I'm suggesting that, but is that a true statement that it's challenging to find a solution for those that are self-employed? And how is it different to a traditional type employee type loan?
Yeah, it's a great question. And I feel it's one of the biggest misconceptions about running your own business and being that you need bigger deposits. It's harder to get a loan. The banks don't like you. Like, it's actually the opposite, I find. At the end of the day, if you've got income and borrowing capacity to service the loan, we're on. And I think with self-employed, a lot of the time we actually get more flexibility with how we can even, show income. And there's so many lenders these days that give you more options on how to verify income. And income's the big one. And this is where it's very much a broker, accountant, client relationship when you are self-employed, because accounting objectives and lending objectives are quite different. Now, your accountant, traditionally, they're there to obviously minimize tax. We all don't want to pay $1 more of tax than we need to. So
Given
the accountant's there to be...
we probably should.
Yeah, I know. Right? So the accountant's there obviously trying to minimize your taxable income, which obviously minimizes the tax you pay. However, when it comes to lending, if we're trying to get a loan approved to go and build something, it's important that we're showing enough income to, show the banks that you've got the income there to service the loan. So that's a really important structure that working with, accountant, client, broker on how we're going to structure your income, how it's all going to look to ensure that the loan gets approved and you can obviously go and deliver your goals.
And just with respect to that, then, do you find, you're working with your client's accountant, or do you recommend them to move to a particular accountant, or, how does that sort of